Good day, Money Masters and Treasure Hunters. Welcome to the December 31st, New Year's Eve, magnificent Monday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he is away for the day. He'll be back with us on Wednesday. Folks, if you're driving around, be careful out there. Some folks have already started their New Year's Eve celebration. Some have already celebrated New Year's Eve around the world. Make sure that you are safe out there. If you're drinking, walk or take a taxi cab. Now, for those of you not familiar with me, I kick things off for TFNN every weekday at 9 o'clock with the opening bell call out here. You can always catch the archives of those shows on Channel 9. And folks, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and provide you with the tools that will help you to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call Accelerate Your Learning Curve. Now, from birth up until about the time that we're 18, our learning curve is dramatic, and our capacity to learn just simply staggering. We learn at a tremendous rate, very fast, and then all of a sudden things just sort of trail off. I guess it's because if there's no exams to take, why read any more books? Imagine, though, what would happen if you kept up an accelerated learning curve for the rest of your life? Can you imagine, maybe if you started just right now, what you could learn, the skills that you could acquire and develop, the capacities that you would have? Here's what I'm asking you to do, because some folks struggle with, what is it that I should do for a New Year's Eve resolution? And I want to give you one, and that is very simple. I want you to learn one thing each and every day for the next 365 days. The next New Year's Eve when we convene, you will be amazed at all of the skills that you have acquired. Now, most of us have smartphone devices. In fact, some of you are listening in on a smartphone with TFNN.mobi. If you go over to the right-hand side, you'll see the smartphone area. If you tap on it, this show actually streams live on Tiger TV. But just what I want you to do is use that smartphone, get out that memo pad. If you don't have a smartphone or a memo pad on it, you can write it down on a piece of paper. But each day, make sure that you write down something new that you learned. I'm going to teach you new things out here. You can always give us a call at 877-927-6648. Fireworks in the marketplace today. The bulls were running. And I'm not talking about the bulls out in Congress or the Senate. I'm talking about the bullish candles. We're going to start here with the Dow. It was up 167 points. The S&P up 24. Composite up 60 points. Russell 2000. And these are up. The Russell 2000, the composite up 2%. The Russell was up 16 points. The New York Stock Exchange up 127 points, up 1.5%. The NDX up a couple of percentage points, up 54. The transport's up 85, 1 6/10% out there. Of course, the big story is if you take a look at the price delta in the futures marketplace. I say the Dow is up 166 points in the futures market. The Dow today from low to high, 336 points out there. Pretty big day for the Dow. We're going to start with the Dow. Normally it's the S&P 500, but we're going to start with the Dow. If you're watching us on Tiger TV, what you do know is you're seeing a pattern out here called a Gartley sell pattern. This is a Gartley sell pattern completed on December the 18th, December the 19th out there, a 0.786 Gartley sell pattern. What it did was about a 50% retracement. Now, here's a reason why you want to be able to have access to, you don't need to trade the futures, but you want to be able to have access to the futures data, because sometimes it's going to provide you with more information. What we'll see in the futures market, because of the big down thrust that we saw last Friday, coming into the market close on the futures contract at 4:15 in the afternoon, we'll see is that the futures traveled down to the 0.618 level, down to 12,813 out there. And we'll switch over to that in just a moment. But you did have a big bullish engulfing candle today. Of course, you need to have follow-through, and follow-through would be a higher close on Monday. If, in fact, this is a little bit of a reversal here, then what we can expect here is we can expect a retracement probably into the swing point on the Dow of December the 18th. That low out there is right at the 13,232 mark. Now let's go over to the actual Dow futures. We'll pull that up on the screen here. And the importance here on the Dow futures is it's very possible that what we had was a key reversal day today. Now, key reversal day, an outside day, has to have three things, folks. Number one, you've got to exceed both the high and the low intraday. You can see here that that was done. In fact, I'm going to erase a couple things off of my chart here because we can always come in here and we can add these back. This way, it'll be a little bit easier for you to see. So if we take a look at the Dow futures here from Friday, the high was 13,052. The low is 12,766. If you take a look at today, not only did you create a bullish engulfing candle, you exceeded the low and you exceeded the high out there. That is a key reversal day. Now, that's one element. You have to be able to exceed the high and the low. Number two, it needs to be able to close in the opposite direction of the way that the market was trading. Clearly, that occurred with, because this is what I would call on a scale of 0 to 10, with a scale of 1 to 10, 1 being the strongest. Somebody says no, sir. 1 being the strongest out there. This is a type 2 candle, very strong. So you've got numbers. So you've got excuse my stuttering out there. What it actually did was it went ahead and closed in the opposite direction of the way that price came. And number 3 out there, we had a little bit of an extended condition. Well, and I can say an extended condition because it's only the Dow that really shows this because of the deeper retracement. If you come off of the low, November 16th, all the way up to the high on December 19th, if you watch the black lines across my chart here, you'll see that what the Dow did was it certainly did a 0.618 retracement. So 0.618, not so much that it's extended as we talk about extensions and butterflies, 1.272, 1.618, but enough of an extension of a retracement for me to qualify as a key reversal day. Now, we'll need to see follow through on Monday, but what I'm going to do here now next, I'm going to go ahead and put up the weekly chart of the Dow, because that's important, because last week, as we take a look at the weekly chart, what you'll see as I blow this up on the screen, number one, first, the red lines that you're looking at, the red diagonal lines, those are channel lines. There's a price channel that goes back all the way to March of 09. The Dow has peaked through that area, peeked through it on September 23rd, 2011, immediately got back inside the channel on the following week, the 30th of September, as well as October 7th out there. You then had the Dow peak through it pretty well on November the 16th as it got down to a low, 12,741. The very next week, got back inside that rising price channel. Last week, the Dow punched through that area. Today, just closed back inside. If you are not long, there is no reason to go long just yet. This is a time period where you want to have this market prove itself. It's still in a downtrend. There's still an A to B equals CD down. And you want to, and right now, because if you take a look at this rising price channel out here, really it's where your back is up against the wall. So you want more proof before you take a position in the marketplace. We take a look at the ETF structure out here in the Dow. What you will see here is you will also see you had some pretty decent volume coming into it today, 11.8 million shares. This is after coming down on Friday with 8.5 million shares. The next area of resistance here on the Dow is going to be the December 21st gap down area, that high, 132.02. Let's go take a look at the S&P 500. We'll take a look at that. That closed up 23 points today. Give me a second here to go ahead and pull the chart up on the screen. S&P 500 also creating a bullish engulfing candle. As I told you earlier, the bulls all over the place. You'll see bullish candles everywhere, whether they're piercing pattern candles or they're bullish engulfing candles. We take a look at the S&P 500 closing out at 1426. What the S&P 500 is going to do, the S&P 500 has a trend line that runs all the way back to the October 4th level. And what the S&P 500 is going to try and do, it's going to go tag that area. It gets back inside that trend line, and you can draw this trend line on your charts at home as well. Use the low of October 4th out there as your touch point. The next low, you want to use June 4th, and you can see that the S&P broke through that area. It broke through here on December this is the daily chart, on Christmas Eve, December the 24th, and it's going to try to get back in there. A very strong, very powerful candle. If it can get back in there, the next piece of information on the S&P 500 will be released to you as it tests the December 19th swing point out at the 1435 to 1447 level. We go take a look at the SPYs out here. Let's go see what the SPYs did today. The SPYs were up 100, closed out at 142. You'll see a very powerful bullish engulfing candle there, engulfing the prior two trading sessions. The SPYs here, the next level of resistance that the SPYs have are the December 21st high, that level being 143.10. You can see it closed inside that swing point. A little bit light on volume. Downdraft on that day, 245 million shares. Today, up with 234 million. So not too shabby on the way up. Expect that the high on the SPYs, the 143.10, to be tested. You get to close above that. The SPY should run up to 144.24. Our call-in number is 877-927-6648. We'll be right back, folks.